Now we look at some more movers that you should be watching. Diane King Hall, host of Morning Movers, is with us, and we're looking at Apple and it plans for the shift to produce more in India. Yeah. Some of your thoughts?
Yeah, so look, this is a big deal. This is according to some Bloomberg reporting about Apple. It's a pivot away from China, and this comes amid this trade policy battle that we've been watching ratchet up, in particular between the two heavyweights, the U.S. versus China. And so this, according to Bloomberg, Apple's planning a huge manufacturing move to move essentially almost all of its iPhone production to India. It plans to produce most of the iPhones it sells in the U.S. by the end of next year there in India. It's a major shift to diversify essentially beyond China amid this ongoing tariff risk and geopolitical tensions. The goal would essentially see Apple doubling its India output to more than 80 million units, that up from the 40 million iPhones which were assembled in the country in the year that was through March of this year. So essentially it accelerates a pivot that we started seeing happening over the past several years now. It started happening during the COVID lockdowns, right? And so you started to see Apple pivot away from China. And I remember a couple years ago on one of their earnings call, Tim Cook talking about how much he liked India. So that stood out to me, and that was even before we had this tariff risk. So in other words, they produce right now today $22 billion worth of iPhones in India over the past year. That was already a more than 50% jump over the previous year. And India now makes up 1 in every 5 iPhones globally, essentially. So their key partners, assembly partners, have been Foxconn and Tata Group, and they're essentially expanding capacity with this. And now this would be all models produced over there, Nicole.
And it may affect the price. That's one thing. So you're talking about 60 million iPhones that would come to the U.S. I know that Apple also noted that they took in a lot more. Yeah. We saw more on iPhones for Apple, but some of that may be the tariff race, getting those in before the tariffs.
Yes, indeed, getting those in before the tariff. And obviously the price risk wouldn't be the same coming from India as it would be from China. Given the draconian tariffs that are being applied to China, that would, significantly increase the price of an iPhone. And then obviously we've heard from Treasury Secretary Scott Bessent that they are close to a deal with India. So the view is that a deal with India wouldn't have the same tariff risk that we would have with China, hence Apple trying to move more of its, essentially almost all of its production of iPhones. That's the crown jewel of the company.
Yeah.
And earnings
less
next
bad.
week. Yes.
It'll be less bad overall. When we look at T-Mobile, this one, the subs here under, losing subscribers. It was AT&T that shined on this one, right?
In terms of the group, so T-Mobile actually added subscribers, but it was less than expected. So that's the reason.
Yeah.
So the subscriber risk is the issue that the street is concerned about, and that came up with all of the companies in this sector reporting. Whether we're talking about T-Mobile today, AT&T, Verizon, that was really what the street was focused on more than the top and bottom line. Now, T-Mobile did beat expectations on its top and bottom line. It reported adjusted EPS of $2.58 a share, which was better than expected. Revenue $20.9 billion, also better than expected. But again, it really doesn't matter in the context of how the street is looking at T-Mobile. They did add 495,000 new monthly mobile subscribers, but the street was looking for more than 500,000. So it was a little light of expectation, and so they're being penalized for that today. Heavily penalized today. Shares down more than 9%. Essentially, they really needed to nail the numbers on this one, especially given how that stock has performed year to date. It has outperformed the S&P 500. It has essentially been the leader in this space, running close to neck and neck with AT&T. But T-Mobile had been looked as better than AT&T because AT&T has debt on its books. They've been winding down that debt, and they had some good news in their most recent earnings, and that was why the street liked that. The issue with Verizon is they're losing subscribers.
Right.
Yeah. So, yeah, but it's a battle between them, and they're having a pricing war, and that's been going on since late last year. Verizon hadn't expected that pricing war to continue this year, but they had to step up to the plate because it has continued.
AT&T, I mean, is a nice performer, not too far off the highs. I was just looking at it year to date, up 20%, a dividend payer. People love that. Last but not least, we'll take a look at Gilead Sciences, and they came out with its numbers and cutting guidance, weaker numbers, cutting guidance.
Cutting some of its guidance, yes, and then it was weakness in its sales that is denting the numbers, and there was particular weakness in a couple metrics that just didn't help them nail the numbers. They did beat on the bottom line, missed on the top line. Adjusted EPS was $1.81 a share. Revenue came in at $6.7 billion. That was less than the street was looking for, and it was essentially flat on a year-over-year basis for Gilead. They lost ground in their breast cancer drug. You saw revenue from that segment fall 5%, and that was well below forecast. That came in at $293 million. Street was looking for more than $300 million there. They also had lower sales of their COVID treatment. Now, they did have stronger sales in HIV treatments, but again, not enough to move the needle overall on sales. And then there are a lot of questions about that space, in particular, the policy landscape there, because there are, possible changes to the government's HIV treatment and prevention programs. What will that mean for Gilead? And then, and by the way, we cannot forget about the expected soon coming pharmaceutical tariffs. So headwinds facing Gilead right now.
Yeah, and I saw they had phase 3 studies, aggressive breast cancer. I mean, doing a lot, year to date up about 11% for Gilead. Many of these healthcare related names were supposed to be the safe haven for 2025 and haven't necessarily been so. And as you noted, maybe more tariffs and regulations on some of these names too.
Yeah, so that's a challenge for this. I mean, it seems like just about every sector has some exposure when it comes to tariff risk. And then also just the macro picture. Healthcare was expected to be a stronger performer this year. But what's interesting to see is how analysts view this for Gilead. You see some mixed reactions from the street. Morgan Stanley is raising its price target, actually. It's raising it to $135 a share. So they see some upside from here, and they are still constructive. They're keeping their overweight rating on Gilead. You've got RBC lifting their price target on Gilead. Now, they just see it, though, as sector perform. They're only lifting it to 92, which signals some downside from here, continued downside from here, because we're off 3% right now. Needham is neutral on this one as well. They're out with reiterating their hold rating.
And if we think about some of the big guys like Merck and Pfizer, they're down this year. So Gilead's a star, you know, without a doubt. I mean, what are some of the folks you've been talking to? A lot of folks this week. What's the sense you're getting about? Granted, this week is a winning week. What's the sense you've been getting from some of the folks you've been speaking with?
Proceed with caution, basically. In other words, it mirrors some of what KG said earlier. We're not necessarily out of the woods yet. There have been some glimmers of hope, especially when you think about the conversations between the U.S. and China. It's unclear which side is the actual thing that is occurring. President Trump said that, Xi Jinping, China's president, called him. China officials that have been saying they haven't had any talks with the U.S. So maybe this is, informal conversations right now. So it's unclear whether those talks are happening. And then in terms of the different people I've talked to, different voices, whether we're talking about economists or industry analysts, there is still some concerns about potential weakness in the macro picture and what that means. And we see that time after time with some of the companies pulling guidance from the year. It is nice to see some of the companies who are either maintaining their guidance because, for instance, you had T-Mobile out with reiterating some of their guidance. And in terms of how the street, for instance, views T-Mobile, even though shares are selling off today, it's now 9% at the moment. You still have many of analysts who are in the buy camp, still constructive on T-Mobile. So you are still looking a search for winners in this market. But the other theme that I think that we continue to hear is that volatility will still be here to stay this year.
Right. And, I will add, Bitcoin has now really shined in the last week or month. And while the volatility has been on the rise and markets have been selling off, month to date, Bitcoin's up 15%. 1 year up nearly 50%. David Strzeski was with us yesterday, and he still likes gold and silver, but he really is a big fan of Bitcoin, where he thinks it could go to 250,000 by July 4th. For
this year?
2026.
Okay.
For our 250th birthday of the United States of America. So he says he holds it directly in cold storage. He's holding it for the long term. So people have turned to, while they're selling the dollar, bonds have been in and out of favor lately, stocks the same. Bitcoin has ended up being somewhat of a winner for 2025. It's undeniable.
It's been, it's reclaimed certain levels across that 200-day moving average. So that was seen as a bullish signal. I talked to Les Borsay this morning from Wave Digital Assets, and one of the views that he had was, you know, you had seen it kind of correlate more to stock price action, right? But you've seen a decoupling of that recently, and it's moved out of that correlation, and he has the view that it's trading more like the safe haven asset. We hear that theme with some of the Bitcoin bulls around how Bitcoin and crypto is viewed, Bitcoin in particular. So it has regained some of that momentum, you know, and we started to see stocks follow suit. It remains to be seen if it's, you know, truly a digital gold, as some like to perceive it.
All right. Well, there you have it, folks. I mean, you're watching what's going on here on Wall Street, and it looks like we could have our second up week in 3, and Bitcoin continues to shine. Diane King Hall, nice to see you. And we'll continue to cover this. By the way, Bitcoin's high was 110,000, and that was near the end of January. Today at 95,545.